Another question I got asked on Instagram was, if you fail a prop firm challenge, how do you bounce back? So for those of you that know my story, my journey, I did fail multiple prop firm challenges when I first begun. I wasn't ready for it. And I didn't have the right psychology, the right risk management in place. And of course, it took me years to actually learn and overcome and actually realize how to do it properly. So my method would be to go back onto your FTMO metrics, your dashboard, see what rule you breached, you broke. For most people, it's the max daily drawdown limit. On a 100K account, it's $5,000. And most people breach that because they're basically over trading, or they're, using too aggressive position sizing. So if it's for that, that, for instance, which is going to be 99% of the people out there, is that they've broken and breached the max daily drawdown limit, then figure out risk management, okay, and learn risk management. Learn how to calculate positions, okay, learn how to set your stop loss, then calculate the amount of pips, then figure out what lot size you should be using to risk 0.5% or 1%, okay, per trade. Once you've done that, okay, and you've got a positive risk reward ratio, for instance, you've got a 1-to-1 risk reward ratio trade and you let the trade run, okay, and hit your target or hit your stop loss, as long as you've got a win rate above 50%, you're going to make money. So that's how I help a lot of people inside the community get past across the line. Is we have, a strategy which is a 1-to-1 risk reward ratio strategy. It's a breakout on the New York session using NAS 100. So as of the moment, that's been a strategy that we've been testing and it's worked really, really well. So we've got 1-to-1 risk reward ratio trade, which means we need to lose 5 trades in a row within a day to breach that rule. Okay. And, the trade and the strategy only really allows for 2 or 3 trades as of a maximum each day. So ultimately, if we've got a win rate above 50%, then we're making money. So that, for instance, is a really good way to bounce back from it, is to learn your risk management, learn a strategy that actually is going to allow you to not breach that rule again. And so you're not going to lose the money, breaching that rule again. So I would typically say, work on your risk management. I typically say work on your psychology, because if you're over trading and you like the adrenaline of trading, then you need to work on your psychology. But if you didn't, for instance, break any of the rules, and you get a free retry, that's a win in my eye. So, you might not have the right risk reward ratio set up. You might, for instance, be taking profits too early on a trade. You might, for instance, be taking too bigger losses and too smaller profits. Those are the sorts of things that most people fall into the category of as retail traders. So to bounce back from it, work on your risk management as your priority is my main answer to that. And there's a few other ways I guess you can work on your risk management. You can practice on demo accounts, IC market demo accounts, the FTMO demo that they can provide you. I would say practice that for a month, and all of the trades that you have should be losing the same amount or making the same amount. If you've got a 1-to-1 risk reward ratio trade, for instance, if you have a 1-to-3 or a 1-to-2, whatever you decide and set up, make sure that all of the profits and all of the losses are done properly. Another really good way to do this, I've done another video on journaling and documenting trades. Set yourself up an Excel spreadsheet. I even posted the link down to the Excel spreadsheet that I've used in one of my other videos. So I'll link that down below so you can check that out as well. But use an Excel spreadsheet to document every single one of your trades. Keep yourself accountable to it. Note the date, the time, the instrument, the strategy. Use a photo. Take a screenshot of your laptop or your phone so you can see what you've taken. Have you calculated the risk? What was the loss or profit? And if you've learned anything from it, write some notes. Do that for every single trade, and I promise you, your risk management will improve, because you'll keep accountable to it, and you can tick it off, and you can go, yes, I calculated the risk. Yes, I calculated the risk. No, I didn't. Why did I not? Because I was being lazy, or whatever the reason was. Keep yourself accountable and document it is another great way to do it. But to bounce back, figure out what you've done wrong, and then correct it. Okay, that's the main answer to it. And for most people, it's going to be risk management.